Hi everybody, this is Osprey from mychartcoach.com, and we are going to take a look at some of the hottest stocks today. Some of the stocks that performed the best in the markets that got some, that made some very bullish moves. And so first up, we're going to take a look at CERC. This stock has been on a very strong uptrend. It has a beautiful chart going. It is very frothy right now. It does have RSI at 88. You have Fasto at 97, so it's at very overbought levels. It looks like here three gaps in a row, so it does look like bearish three gaps up, gap ups reversal pattern has formed today. So there's multiple gaps in a row, and that just signals that the chart is getting frothy. It's pushing really strong. You can see today's candle formed well above the upper Bollinger Band. So EMA 4 currently at 339 is the key level to hold. Notice how the candles have been holding that level ever since EMA 13 was tested back here in the first week of December. As long as that level is holding, the signals keep riding. Once there's a close below, you could see some consolidation. If you look at the CERC weekly chart we've been working on, you can see it's breaking out above key resistance this week. It is very frothy on RSI and Fasto on the weekly chart as well at overbought levels. It's been pushing hard for multiple weeks in a row. It's on a 3-week run. It broke above the 100-week moving average last week, which is the gold line. And then this week it's breaking above the next key resistance level, which was the support from back here in 2016. And so it's breaking above support and it's heading towards the key resistance, which is the high close from November of 2016. And that we're calling that around 510. It's between 5 and 520. That would be the next key zone. So it looks like it's trying to work its way up to $5. We'll see if it can get through here. Between $4 and $5, there was a lot of trading between August and December of 2016. So this is going to be a big resistance level to work through. If you see it start stalling out here, that could be a signal that it's going to take a break. Okay, let's look at IPWR. Okay, and then just going back to this, if it does come up there and it hits that level, that could finally be that top that everybody's looking for. Okay, let's look at IPWR. Okay, so this stock had nice follow through today. Congrats to everybody that caught yesterday's alert. Our RSI is at 63, so it's still not at overbought levels. Fasto is down here at 50 because of the long upper wick. So it did close up 20% today on the day after being on a 3-day run here. It made that really strong move yesterday with the close above the middle Bollinger Band, but it failed to get above that 50-day simple moving average at 176. It did close above that level today, so that was good. But look at the long upper wick. It ran all the way up here to the 300-day simple moving average at 271, fell to stay to that above that level, and it pulled back. When it dropped below, that was your signal to lock in gains. Notice that it closed right at the upper Bollinger Band. The upper Bollinger Band is currently at 199, and so it worked its way all the way back into the bands. So in order to head higher, it's got to get above that 100-day simple moving average at 212 and the 200-day simple moving average at 233. Failed to break above those levels, and then you could see that 50-day simple moving average tested. You really want to see that level hold. If it dropped back below, it'd be back in this previous channel. As long as that middle Bollinger Band down at 155 is holding, the uptrend is intact. There was a giant volume spike today. We had the bull crosses on MACD. The big red flag is accumulation, distribution, and shaken money flow. If you can take a look down here, notice how it's just fallen off of a cliff completely today. There was a pullback yesterday, and then today it really dropped down, and there's a huge spike down on shaken money flow. And that's not what you want to see when a stock is up 20%. This is reflecting dilution. The company's selling shares into the rally. It's just not what you want to see if you're long. And that's why we say go to the sidelines once you start seeing that long upper wick form. Okay, look at this LTBR. This stock closed up 28% today, and it has a similar sort of pattern. It had the very long upper wick. The share price ran up here to 205. It hit this resistance zone from over here in back here in June of 2000 or June of this year, and so it hit this zone, pulled back. And then it dropped all the way back down here to below 150. Now it is above all the moving averages on the chart currently. It's above the 200 and 300-day simple moving average currently, and those are the key levels to hold below. Currently at 127 and 124. There is a gap between high of day yesterday and low of day today, and so that is the risk that it pulls back and fills that gap. As you can see, a drop down there just below the 300-day simple simple moving average, down to about 122 would fill the gap below. It's hitting, key resistance. It has to get above this previous close from back in June. That was support. Now it's resistance, so it has to bust above this 155 level. If it can do that, then this 175 is a big level to break. As you can see, there was a lot of resistance in that level in the past, and so it's got some work to do. Up here where it was at 205, just above it is the high close level to break, which is in June what is that, June 5th, the close up here at about 227. And so so if you see the share price pulling back, look for a potential bounce off of 122. And then once again, if you look down here at accumulation distribution, and then you look at shaken money flow, look how it just fell off of a cliff again. See that big spike down? That's not what you want to see. The share price was up today 28%. You should see those rising, the big drop, the big long upper wick. Those are all signs of dilution. So if you look here at the LTBR 15-minute chart, what you can see here is it ran, had all the magic happened early in the day. Notice that it had the climax spike. You've got the big volume spike, and then the pullback from high of day, followed by the red candle. These were signals to lock in those gains, and then that turned out to be high of day. They faded it, throughout the rest of the day. It got below EMA 4 and started riding EMA 4 resistance lower. If you didn't exit up here, once it got below the middle Bollinger Band, that was your signal to get out. When it crossed below the middle Bollinger Band here at 145, it just proceeded to continue riding EMA 4 resistance lower. This was a very strong short from $2. And then, as you can see, the next target is the 50 simple moving average at 141. It needs to hold that level. It needs to bounce off of that level. If it fails to do so, you can see down here there's a gap between high of day on the 26th and low of day on the 27th, and so what you could see is a potential drop down here to fill this gap, and so a drop down, if the 50 simple moving average breaks, you can see a drop down to 121 down here to that 100 simple moving average and that gap fill. Okay, take a look at INFI. Now this stock made a very nice move today, and so this closed up 18%. It had a bullish move. If you look up here, RSI is at 63, so it has a lot of room to run. It has ran all the way up to 90 on RSI in the past. It broke above the 50-day simple moving average today, and so that's always a big resistance level to break. That is the green line right here, currently at 211, and so that's the key level to turn into support. Today's candle did push through the upper Bollinger Band, so you could possibly see that pull back into the bands just to test that level and then bounce off of it to head higher. If it does push higher, what you want to see is a break above this closing price here on the 3rd of November, and that's just below 260, and then you've got the high close here on the 9th of November, and that's at about 280. Those are two big levels to break. You've got the $3 level, and then above that is up here at 370. So this could get moving higher if it can hold on to that 50-day simple moving average, stay above that level, and then break above that 250, 260 resistance zone. Notice how there was this falling wedge pattern, and it's breaking out of the top of this descending resistance line from a multi-month pattern, and so that this is a very strong move. The volume needs to pick up. It did have a slight increase in volume, but what you really want to see is a bullish volume spike. There was a recent PSAR bull flip. The green dots are below the candles. Notice how the green dots were above the candles this entire time, and then they finally flipped below the candles on Friday, and then you have a MACD bull crosses on both time frames, and so these are signals that there's a possible new uptrend starting. Okay, so if you take a look here at the INFI 15-minute chart, you'll see here it had this big push into the close. Notice how strong it was. At 2 o'clock, it just rode EMA 4 really strong into the close, and then you had this long upper wick with the big volume spike. So it looks like they did dump some shares here, or there was some profit taking here at the end of the day, and so people were locking in some gains. So keep an eye on EMA 4. If you see it drop below 228, that could signal a possible consolidation in a middle Bollinger Band at 215 test. As long as that middle Bollinger Band is holding, the uptrend is strong and intact. Okay, let's take a look at KBSF. Okay, this stock ended up making a nice move today. It closed, at 53 on RSI and 59 on Fasto, so this was very sweet. It ended up breaking above the key levels. The chart had some work to do early in the day. When it started out, it was below, multiple moving averages. As you can see down here, it's bouncing off of the gold line, which is the 100-day simple moving average at 308. And then there's EMAs 4, 8, and 13. Those are the pink, lime, and orange lines. And then you have the 200, the 50, and the 300-day simple moving averages, the red, the green, and the blue lines. Basically, all of the moving averages that we track over here on the left, they're all converged, all in this same zone, but between $3 and $4 here. And so basically, the break above the 300-day simple moving average at 409 is the bullish move that we were looking for. It got above that higher intraday and pulled back, but that was this is the signal that the chart is heating up, and so it does have the PSAR bull flip. Notice the dots were above the candles, and then now they have flipped below. So that's a good sign. It has a MACD bull cross down here in the 8, 13, and 5. That's another good sign. The chart's heating up. The 12, 26, and 9 needs to bull cross. It has to stay above the middle Bollinger Band and the 300-day simple moving average for this to be a good setup. If it fails to hold those levels and drops back below, you can see it could continue consolidating. It's just at the top of this previous channel. You can see it had a strong channel right here, and it's just above that, and so it needs to stay above. If it can, then you're looking at the upper Bollinger Band here at $5 is the next key resistance level, and you can see there's some resistance right here at 550 will be another big level, and then the recent high close is way up here at $8. The thing is that obviously the retail sector has been out of favor, and they've been under a lot of pressure. So seeing it perk up here, this could be a good sign that maybe people are starting to bottom feed since we're going into the end of the year. So it's always a time. This is the time of year to start looking at beating up stocks to see if they could get a rebound going. And so let's look at RGSE. Okay, so yeah, there's some solar stocks that are heating up today. You've got RSI at 65, Fasto above 85. The Plus DI is starting to break out here. And so the bullish move is just like the last chart. There was a close today above the green line, the 50-day simple moving average at 169. If it can stay above that level, that would be very bullish. If it drops back below, you want to see that middle Bollinger Band down there at 140 turn into support. That's the dotted purple line. Notice this is the first close above the middle Bollinger Band since support broke way back here on the first trading day in November. That's when a new downtrend started. So this is the possible start of a new uptrend. There was a PSAR bull flip last Thursday. You want to see the 50-day simple moving average hold. It'd be a red flag if it dropped below. The key level to break is over here in November on the what is this, the 17th. If it can get above that level, then that's going to signal more upside. And then you could see there was some sideways action here. And the big level to break is over here in October, the high close. It's about 238 or so. And so if it could close above that level, that would be a signal it wants to break out higher. It could be a nice move just between this 180 and 240 zone if it can get above that level. So keep an eye on it. Notice the RGSE does have the volume spike. So it does have the volume behind it, which is always a good sign. And then you've got the down here the MACD bull crosses. So it's a very similar setup to KBSF. We'll see if it can follow through, and get back to that previous level. Yeah, and then at the same time we have SUNW. Sunworks is also really heating up here. It has RSI at 66, so 64. It's in the bull zone, so it still has some room to run until those overbought levels. There was a bullish crossover on ADX here with Plus DI crossing ADX to the upside, and so it's the exact same setup. There was a bullish close today above the 50-day simple moving average. That's the green line. Notice how it hit those levels previously and failed to get above. So the close above today is a signal that it wants to head higher. It needs to stay above 117. That is the current level of the 50-day simple moving average. If it drops below, it could drop back down. Notice that it spent multiple days consolidating down here between the middle Bollinger Band and the middle Bollinger Band here and the top of this channel, which is right here at 105. So it channeled between $1 and 105 for a couple of weeks, and then today it finally broke above. So that was a big move. And then yeah, it looks like over here can't take your eye off of the gaps. So yeah, so there's the gap. That's always a big level. I should have caught that right away. And yeah, the gap is the next play. Okay, so this is the deal. Whenever you've got a gap on the chart, it becomes this key level, two key levels on the chart, and that's the bottom of the gap, which is always the first level to break if the candles are below. And so it closed just above that level today. And then notice the upper wick didn't quite hit the top of the gap, which is right over here. This is the top of the gap, and so what you want to see is a break above that top of the gap level. Once this red line is hit right here, this gap over here will be filled. The space between those two candles, low of day on this candle and high of day on the low of day on the 13th of November and high of day on the 14th. And so a break above, a close above, that would put the 300 or the 100-day simple moving average at 135 on deck. So it has to break above that top of the gap. A gap fill can be a climax event, so keep an eye on people taking profits at that level. It would be very bullish if it could break out above. Okay, look at NEOT. Talk about breaking out. This stock is breaking out. It's been on a nice run. It is at overbought levels on RSI and Fasto. It's very frothy at 85 and 96. It did have a bullish crossover here on ADX. The last couple times it pulled back down, below, very quickly. So keep that in mind. That has been a sign of a top before. So we'll see what happens. The big thing is the break above resistance. So notice that it broke above resistance last week on Friday on this candle. It closed above the closing price in October, the high close on October 17th. And so that was signaling more upside potential. And then it had a nice, because notice how multiple candles failed to close above. And then when finally it closes above a resistance, you're like, okay, now it's ready to go. And that's exactly what happened. The theory is proven correct once again. And so it started heading higher. It's riding EMA 4. And then it closed above the high close, or the high of day on the 17th, which is the recent high level. And so that was a very another key level to break. What you want to see on a pullback, that level turn into support. As long as EMA 4 support is holding at 187, the signal is just to keep riding. Once it drops below that, you could see it consolidate, and that's when possibly that middle Bollinger Band at 154 is tested. As long as the middle Bollinger Band is holding, the uptrend is intact. Notice this has been moving on extremely light volume. If you look at the NEOT weekly chart, you'll see where the next key resistance levels are. And so it's currently breaking above the $2 level, which is back here in June and July. This was a support level before there was the big gap down. And so it's breaking above that. And then now it has to get above the May high close, which is 250. That's the really big level. It's going to get some resistance here. It's going to get some resistance in the candles in between, but it's really all about that 250 level. That's the high close level. That was the 2017 highest close for the week. And it looks like the highest close as in 2016 as well. So you have to go back to 2015, the last time there was a close above 250. So when you look at it that way, if it closes above 250, that would be extremely bullish. And then you'd be talking about these prior levels, because there was this huge drop. So this is a crucial level on the chart. You could see back here, this is the top of a prior support level. This is a really big level. This is huge on the chart. So between 2 and 250, you're going to see some resistance. If it can get above 250, that's going to signal it wants to keep heading higher. Okay, look at WPCS. Okay, so the stock is heating up. It's at 43 on our side. You've got Fasto at 57. You have plus DI, minus DI, and ADX all lined up here. They're very tight. You want to see that plus DI break out. So this chart has been in a downtrend. Okay, so the downtrend started here on the 22nd when there was a close below the middle Bollinger Band. The candles have been riding EMA 4 resistance lower. It tried to get above EMA 4 here. It closed above slightly. It failed to break above EMA 8. And then finally today there's a full Marubozu candle where there's no lower wick, no upper wick. The bulls were in control the entire day. Low of day was the first trade. High of day was the last trade. It's maximum bullishness. It is on very light volume. Notice there's not a big volume spike, but nonetheless, it was a bullish day. And so it closed above EMAs 4, 8, and 13 for the very first time since back here on November 20th. So this is a bullish change in trend. So what you want to see now is a close above the middle Bollinger Band at 106. That's right where it closed at, that dotted purple line. If it can close above that level, you can see right where the big target is. Up here between 130 and 139, you have the upper Bollinger Band, and the 50, 100, 200, and 300-day simple moving averages there are all converged at the same level between 136 and 139. So that's the big level. It has to hit that level, break above, and turn into support. That's what it did back here in November. It failed to hold and pulled back, and so it becomes the next target. Get above the middle Bollinger Band, you could see a run up there to possibly 140. Okay, so let's look at GRWC. We're changing some gears here. This is a over-the-counter medical marijuana company, and so yeah, this is one that yeah, it's up 20 times. So yeah, this is a 20 timeser. We were all over this when it pulled back, and we did call the bottom down here, but it's funny how nobody wants to buy it when it's when it's it's by the fear thing. Nobody, the big volume spike was saying to load this thing. People were loading heavy, and then they were loading down here at a penny, and then today it hit 22 cents. So yeah, you're talking about monster percentage gains if you were these people down here in September. And so just keep that in mind, that there's a lot of stocks in the marijuana sector that have similar types of charts that are making similar types of moves. And so it's all about just trying to get the right timing, find the right plays, and then yeah, it's just you have to have a good strategy. And so here, this has been the swing, beautiful swing trade ever since the middle Bollinger Band turned into support. Even if you didn't load the bottom here, once it got above that 50-day simple moving average in the middle Bollinger Band, it was signaling to ride, and it's been holding EMA's 4 and 8 support ever since. It came down, bounced off of EMA 13, but it's just been pushing super hard, breaking resistance level after resistance level. Today it broke above the key August level, so you can see back here in August this was big support. I thought maybe it might top out at that level, but it busted above, and so that was really strong. And so this is a chart that we made before, and as you can see, it looks like it's filling this jar back to this August. So you have the August 7th that it broke above, and now it looks like it's making that run up to the 200-day simple moving average. That is the next big level. It could pull back. If it drops below 20, that would be a signal of possibly a temporary top, since this was a key level back in August and in July. But if it can stay above 20, you could see it head up to that 200-day simple moving average at 39. So yeah, huge move. Congrats everybody. Thanks for being in the chat and following, and I really appreciate it. Yeah, this is MJTK. Okay, check it out. It was up 84% today. This is another marijuana sector play. It has a history of big runs. Look at this chart back here. You can see it's at 0024. Back in March. It was way up here, well above a penny. And so if you look at the chart here, what's going on is we've got a nice breakout today. We were on this, people put out alerts. We were following, the chart, and it broke above that 15 level, the 0015. And so the break above the closing price here on the 13th of December, that was signaling, okay, I wanted to head higher. And then we were looking for this, closing price here in August, the 17th of August, and it broke above that at 19, and then the next key level was up here at 23. There was some resistance from June, and it actually broke above that. It ran all the way up here to this big July high close where it topped out for the day at 28 and pulled back, and so that's going to be the key level to break at 28, and then over here in what is that, May, the high close in May of 3. So if we can get through that 28 and 0028 and 003, that's going to signal that it wants to break out higher. This chart has a lot of upside potential, as you can see here from our the previous levels. It's been up here at 2 cents recently. So yeah, so keep an eye on it. Yeah, these stocks are making some big moves. And then let's look here at SEGI. So yeah, so this one made a big move. All right, so it was the 440% gainer. So just keep in mind, anytime that you have a stock that is up multiple 100% on the day, and it's an over-the-counter stock, the safest thing to do is to lock in gains, and then the next day you could just jump back in. You know, it's like you can't get greedy. Bulls and bears make money, but pigs get slaughtered. And by holding overnight when you have like a 500% gain, it's just it's just asking for trouble. And by trouble, I mean the gap down open. We are watching the ticker, and what happened was there was one pre-market trade at 0.0015. And they opened it at that level. Only one trade, and they did that across the board to multiple stocks. And there's really not supposed to be over-the-counter pre-market trading, so it's just very odd how it works out that way. And so they opened the price right there, and so immediately it was behind the 8 ball. People panicked and they sold. Candles work back into the bands, and so everybody was warned that it was well above the upper Bollinger Band, and the candles could work back into the bands. And the first support level is EMA4 down here at 0.008. So that is the bounce target. We're looking for a potential bounce off that level. It would be better if it stayed above 0.0010. That it would be nice if it had that lower wick bounced off of it and stayed above it, back in double zeros. You don't want to see a stock pull back into triple zeros once it's been in double zeros. That's a red flag. It has to stay above EMA4. It's going to be a major red flag if it drops back below. So yeah, keep an eye on it. We'll see what's happening if it's really going to head higher, or if it was just a BS on their whole cryptocurrency thing, okay, on their blockchain or whatever they're doing with media. Okay, so SPLIF. Okay, so check these guys out. They had a medical license today from the state of California, and they're applying for the recreational license, which is they think they're going to get it. It's going to be tough, but if they do, that's going to be big news. Notice today it broke out. It closed up here at 45. This is on Blue Sky Breakout. Okay, so look back here. The trading on this is back here in May of 2015, and so this is at the highest levels that it's been. It's breaking out big time. So keep an eye on it. It's a good. It has some momentum. We'll see if it can break out higher. Yeah, see, somehow I missed the chart up there. But yeah, so keep an eye on SPLIF. That's another one to have on your radar. Okay, so yeah, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. I'll post the video at the end of the, or I'll post the link at the end of the video. Thank you.